So we are going to be looking into today the uncollectible accounts receivable. So when you loan people money, there are some people that are not going to pay you back. This is a way of writing off some of that total. So accounts receivable that cannot be collected are called uncollectible accounts, sometimes referred to as bad debts. So you want to estimate how much is uncollectible out of all of your accounts to create a contra account called allowance. This is called the allowance method. It records the losses from the uncollectible accounts. And the difference between the two account balances is called the book value. And if you're doing it on your accounts receivable to the uncollectibles account, it is the book value of your accounts receivable. The amount of receivable business that expects to collect is called the net realizable value. So that's the ones you're expected to collect from, is your net realizable value. The other is what you're expected not to collect. The two methods that are commonly used for your estimating your uncollectible amounts are the percent of sales method. This is like saying, hey, I made $1,000 in sales this last month. That includes my cash and my on-account sales. I'm going to take 1% of that, which is $10, and I'm assuming those are not going to be uncollectible. Versus the percent of accounts receivable method. Well, I only sold $500 on account. So if I think about 2% of those will become uncollectible. So again, it's $10. So you'll usually have on the accounts receivable, it's taking discounting and putting away, not looking at your cash sales, but only focusing on the ones that you sold on account. Analyzing the accounts receivable according to when they are due is the aging accounts receivable. So if it's more current, they're more likely, there's a higher chance it's going to get paid off. When you start looking at farther out, let's say it's over 90 days old, more than likely those are not going to get paid off. And so you're going to have a higher percentage of each of those accounts as you go up in the aging of the account. So let's look at this. The current account are looking at the ones that are currently due. We're at 1%. The ones that are in the first 30 days are at 4%. The ones in the next 30 days at 12%. The next 30 days at 30%. And then over 80% of those are not going to be collectible. And so we want to figure out what is our uncollectible balance based upon our current totals. So we'll take the amount we have in that age bracket, multiply it times the percent, and that becomes your uncollectible amount. And so you do that, keep going across, multiplying each time. And then eventually get down to the over 90 days, and you're going to total it up. Now, you had this account already created. Some of the money you had in that account was not used. So it's going to offset how much you need to add to it. So basically, you want to have that account balance to be at $25.09 and 25 cents. So how much more do you need to add? You need to add $2,384 and 10 cents. And so we're going to adjust the accounts. So we need to increase our accounts uncollectible account expense. So we're going to increase that side. And we're going to increase on the credit side but adding in that same amount. And that's going to get that balance of your allowance for uncollectible debts to get to that $2,509.25 that we had calculated on the previous slide. So these are adjusting entries. And so we're doing this on December 31st, based upon our date up here. And our uncollectible account expenses was a debit of $23.84 and 10 cents. Our allowance for uncollectible accounts, our contra account of that, is at $2,384.10. So again, those are the offsetting accounts. What general ledger accounts are used for uncollectible accounts receivable? The contra accounts out of allowance for uncollectible accounts and the expense account of uncollectible accounts expense. Explain why an adjustment for uncollectible accounts is application of the matched expense with revenue concept. It is a recording the loss from uncollectible account to match the expense, because it's going to be expense to you of the uncollectible accounts in the same year in which the sales were recorded. And the two methods, you can either do a percent of sales or you can do percent of accounts receivable method. How is the accounts receivable affected by the estimate of the uncollectible accounts? It is not affected. Now let's go ahead and look at our work together. So we're going to go through and we are going to calculate by multiplying the percent as we go across. And so all we're doing is taking this percent total that's given to us. That percent will be given to you right now. And you're going to multiply it times the amount that is currently in that total. So $16,485.18 times 2%, when rounded to the nearest penny, gives $329.70. When we have $12,489.05, and we multiply that times 4%, because again, we're getting to an older account, because it's $499.56. So we're multiplying these two numbers to get our uncollectible number. So $958.18 times 8% gives us $556.65. Then we have $4,218.21 times 20%. We're at the over 60-day old. And as we see, we're starting to make bigger and bigger increases as we go further and further out. And that's $843.64 is that total when we multiply. Then we're going to take our $3,157.10 and we're going to multiply that total times 70%. And that's $2,209.97. When we total that column up, we get $4,439.52. And again, this is a projection of how much do we think of our current balance, our accounts receivable, at the end of the fiscal year is going to go uncollectible. So we can have that written off on the same year as the expenses were written in. So the current balance of our uncollectible accounts, it tells us up here, before the adjusting entry, we had a $236.89 credit. So 236.89. And we're going to subtract those two numbers because it is a credit. If it was a debit, it would not subtract. But again, this accounting book, they tend to give us the nicer end of things. So we're going to usually start with a credit. I don't think there's a time that right now in this lesson you're going to have anything else. So when you subtract them, you get $4,202.63. And then we're going to go ahead and grade that and check our answers. Now we're going to journalize our information. So, again, the date we're doing this, going on to the next step? There it goes. We have the information up there. We're going to take and put that in our journal. We're in our adjusting entry for December, let me capitalize that, December 31st. And we have the uncollectible, excuse me, accounts expense. Because we are taking the expense on this month. And our reference, or excuse me, I forgot we didn't have a document number written just yet. We have 4,000, and it's coming from this total down here. 4,202 and 63 cents. And again, the contrary account is going to have the same number, but put it as a credit, 4,202 and 63 cents. And this is going to allowance for uncollectible accounts. And we made our adjusting entry. We're in our final step. And y'all will be doing one very similar to this on your own.